I hope you and your near and dear ones are all keeping safe and healthy. On the earnings call today, I am joined by my colleague to talk about our existing EV product portfolio and future EV product pipeline, Mr. Ankur Modi and Mr. H.S. Rana. We hope you have had a chance to look at our financial results and presentation that is uploaded on Stock Exchange as well as the company's website. We will briefly discuss about the business landscape and then update on our performance in the preceding quarter, following which we will be glad to respond to your queries. Starting with the industry update, as you know, the auto industry performance for the quarter from October to December continued its growth momentum, with October being one of the best months during the quarter. This was backed by sustained retail sales momentum post-festivals, low channel inventory, and a soft base, amid rise in preference for personal mobility and continued positive sentiments in rural and semi-urban markets. Manufacturing and distribution activities have been getting ramped up gradually since second quarter, in line with the rest of the economy. However, the impact of the pandemic on the supply chain continues to inhibit a complete return to production normalcy. Nevertheless, the most automotive industry segments have reported successive improvement in offtake throughout the second half of 2020 on the back of initial bounce provided by pent-up demand, followed by the preference for affordable personal mobility and continued rural resilience. E-commerce and the need for last-mile connectivity have served LCVs well throughout, with trucks being the latest category to rebound amid pickup in the freight rates amid near normal economic activity domestically. On the flip side, segments related to public transport, such as buses and passenger three-wheelers, continue to lag heavily due to closure of schools and offices for most part, amid ongoing concerns over social distancing, which also has started off easing to some extent. Commodity prices have seen a sharp increase during the quarter and will remain headwind going forward until the commodity price adjustments are aligned with our customers. The proposed PLI scheme of 57,000 crores for the auto sector was also a major development in the latest quarter, with the intent of the scheme for auto sector being furthering the Make in India initiative and making it also export-oriented from largely an import-dependent industry for some critical components. Overall, the demand is expected to be sustained on the back of rural markets, which have higher income visibility due to good monsoon, higher kharif acreage, and better MSPs. The mobility demand surge given by COVID risk is expected to normalize as public transport restarts across regions. Overall, the medium to long-term outlook looks positive for the industry. Moving on to budget updates, while we all know about the budget announcements, so let me highlight about a few pointers from the budget that pertain to us and the auto industry, and I'll try to be brief. The voluntary vehicle scrappage policy has been included in the budget. This will encourage the consumer demand towards new and environment-friendly vehicles. Similarly, the Ministry of Roads and Highways had proposed a green tax on old vehicles for reducing pollution, and this highlights the efforts of the government to shift the energy consumption towards the renewable sources. All these are good lead indicators that the reforms are going to broaden the scope of work for Minda Industries. The Finance Minister has also announced that custom duties on specified auto parts like ignition wiring sets, safety glass, parts of signaling equipment, etc. will be hiked to 15%. This will certainly promote domestic manufacturing of automobile components in the country and reduce the quantum of imports. Volumes in the CV segment is yet to recover fully from the COVID, and the government has given a welcome push by announcing a new scheme worth 18,000 crores to support augmentation of public bus transportation services. With Harita sitting in our portfolio, this augurs well for us, and we will be monitoring the situation closely to see how we can benefit the most from these opportunities. Overall, we believe the budget was more focused on building future India with a lot of emphasis on infrastructure building, which is a key necessity and ingredient for industry to flourish and create employment opportunities to meet the needs of growing India. Now, I would request our colleague, Mr. Amit Jain, to talk about our EV products. Amit, over to you.
Yeah, thanks, Sunil. So in line with global trends of what's called CASE, connectivity, autonomous, shared mobility, and electrification. We at Minda Industries have also been tracking these macro trends, and more specifically for India, looking at how these trends stack up. And one of them, and the most important for us today, is electrification. And in this call, I'll try and mention a few points about how Minda looks at electrification and what we are doing here. On electrification, if you refer to slide 4 in the deck, we have been working to upgrade our existing group products to meet requirements specific to electric vehicles, like low energy consumption, light weighting. We have several products in this segment that we've gone into production with, which includes LED headlamps, tail lamps, side indicators, low current switches, and electronic horns. We've also launched a few new products for electric vehicles from our range of products like sensors. We have launched new sensors specific to electric vehicles like APS or accelerator position sensor, brake pedal sensor for regenerative braking, EV battery temperature sensors, and also vacuum sensors for EV brake systems. If you refer slide 5, over the last couple of years, we have also been working on a complete new range of products for electric vehicles, which were earlier not a part of our portfolio. These products are synergetic to our group and are mainly in the area of electrical and electronics. These products are mainly focused on the low voltage electric vehicles, which are primarily for two-wheelers and for three-wheelers. We believe that this segment of two-wheelers and three-wheelers will have the largest and the quickest adoption in the electric vehicle segment, and primarily because there is less dependency on charging infrastructure, and as well as the range of these vehicles would be enough for more city driving conditions. On our focus in these new products for two-wheelers and three-wheelers include ECUs, DC-DC converters, onboard and off-board chargers, telematics control units, and smart plugs. We've also been working on developing battery management systems for lithium-ion batteries, along with our technical partner, Automotive Power, in the US. Out of these range of products, ECUs, telematics control units, and spark plugs are already in production, and they went into production this year. And a few products like battery management systems and onboard chargers will go into production in the next few months, mainly in the next financial year 21-22, for some of the major OEMs in India. We believe the FAME II policy and the entry of established players into a very fragmented EV market currently will see a very strong growth of two-wheel and three-wheel EV vehicles. Most of our products like ECUs, telematic control units, smart plugs, and battery management systems will, can also be upgraded for the four-wheel segment. So we see some strong future growth of all our platforms in these segments also. So I think that's all from my side on the electric vehicle outlook from Minda Industries. Over to you, Sunil.
Yeah, thanks, Amit. So while we all know that the EV volumes in India are not significant as of now, and that most of our products are agnostic to type of energy vehicle operates, it is an important aspect to always stay atop, and it will also help us capture additional opportunities the EV segment may provide to us. Coming to our performance, you may refer to slide 8 and 9. At a consolidated level, during Q3 of FY2021, the company reported a revenue of rupees 1,802 crores as against 1,327 crores for Q2 of FY2020, registering a growth of 36% year-on-year. This, as you will note, is significantly higher than the overall industry volume growth of 17%. The revenue for Q2 FY 2021 was 1465 crores, implying a quarter-on-quarter growth of 23%. We have witnessed growth across almost all of our product portfolio. Healthy demand coupled with higher kit value per vehicle is enabling us to continue outperform the industry. EBITDA for Q3 FY21 was at 264 crores in comparison to EBITDA of 163 crores for corresponding quarter, i.e. Q3 of FY 2020. The EBITDA margin also has improved significantly on year-on-year basis from 12.3% to 14.6% in the current quarter due to better operating leverage and sustained cost control. EBITDA for the preceding quarter, i.e. Q2 of FY 2021 was at 215 crores, and as you may note, the EBITDA margin is same as in Q2 despite the full impact of manpower cost reinstatement which happened in the current quarter. The profit before tax for Q3 FY 2021 was at 164 crore as against PBT of 78 crores in Q3 of FY 20, registering a growth of 110%. Depreciation has been higher as new plants of alloy wheel and sensor has been commissioned and capitalized during the quarter. Finance cost has increased marginally quarter-on-quarter basis on account of interest on loan for above expansion which were capitalized till last quarter. The profit after tax, which is Minda Industries share for the quarter, was at 108 crores as against 45 crores in the corresponding quarter last year, an increase of 142%. We are happy to communicate that board has also declared an interim dividend of 17.5% of face value to reward and distribute wealth to its shareholders. Moving to the product lines, you may please refer to slide 10 and 11. Starting with switching system, the segment achieved revenue of 631 crores for Q3, contributing about 35% of total consolidated turnover. Besides industry growth, demand for premiumization in switches continues to drive our growth in the category, with new orders received for various switches like steering wheel switch, second gear switch, driver side switch from new customers, and also some power windows and roof switches, etc. So we have been adding new customers for switches which currently we have not been serving. In our two-wheeler switch, we have acquired a new customer, John Deere, with orders for USB chargers and ignition switch. Moving to lighting business, it achieved a revenue of 426 crore for Q3, contributing to 24% of our total turnover. We continue to receive more orders for LED lighting in two-wheelers, commanding a better pricing with recent order coming from Yamaha. As communicated earlier, we will need to set up a greenfield plant for meeting increased demand in four-wheel lighting business. Our teams are working to build a master plan for the same. Moving to light material technologies or LMT business, it has achieved revenue of rupees 270 crores for Q3, contributing to 15% of our total turnover. On our two-wheeler alloy wheel project at Supa, the third line have also been commissioned. Previously, two lines had been commissioned in end of Q2 FY21. We have also started commercial sales from the lines already commissioned with revenues of around 30 crores in the current quarter. The last and fourth line is expected to be commissioned by March, and we expect stabilization to take couple of quarters thereafter to reach optimum utilization levels. Moving to acoustics or horn business, the business has achieved a revenue of 188 crores for Q3, contributing 10% of our total turnover. Our European subsidiary Clarton Horn has received new orders for electronic horns from Korean customers and a US customer. Moving to other product businesses, it has achieved a revenue of 288 crores for Q3, contributing to 16% of overall top line. The other product revenues mainly comprises of sales from sensor business at around 55 crore, similar amount from blow molding parts business, and around 33 crore from ESIS. We have received orders from a recently commissioned temperature sensor also from Yamaha. For wheel speed sensors as well, apart from Korean market, we are in process of getting approvals and new orders from the Indian customers. We have healthy order pipeline for our blow molding parts business with new orders from another Japanese customer. In fact, our current capacities are not sufficient to meet the demand order, hence we would be required to enhance our capacity. We will discuss the same further in our subsequent slides. Total borrowings as of December 31, 2020 were at 1,083 crores compared to 1,152 crores for Q1 FY21. While we were able to reduce our working capital as at 31st March 21 last fiscal year end, which was also positively impacted due to last 10 days being non-operational due to COVID, with increased volumes and there has been increase in working capital levels with respect to March 21 and also addition of new working capital in our alloy wheel Supa plant. We have also invested around 250 crore of capex in year to date. Despite all the same and supported by proceeds from the right issue, the borrowings have reduced and approx 190 crore of cash was available as of December 31, 2020, resulting into our net gearing at around 0.37. Moving to slide 12, in terms of our revenue pie for the quarter ended December 31, 2020, OEM business accounted for 86% of total revenue and aftermarket business is around 14%. Our aftermarket segment continues to see the outperformance as mentioned in the last quarter, with sales in current quarter improving more than 50% with respect to corresponding period last year. I'm happy to mention here that our direct aftermarket sales in the last quarter has reached annualized revenues of close to 1,000 crores per annum. In terms of segment mix of four-wheelers have contributed around 52%, while the rest is for two-wheelers, which is at 48%. Moving on to the next slide, in continuation to our update on consolidation of business of Minda TG and TG Minda in previous quarter and to reap efficiencies of consolidation, the board has approved dilution of 1.1% stake in Minda TG Rubber India Private Limited by fresh issuance of shares to TG Japan, our JV partner, instead of sale of shares by the company as it was envisaged earlier. Overall, it does not have any impact on the strategy which we have informed in the last quarter. Moving to slide 14, with regards to Harita Shipping Systems, the NCLT Delhi has pronounced its decision for merger this week, and we are awaiting copy of the final orders from NCLT Delhi. In NCLT Chennai, the date for pronouncement of decision is yet awaited, wherein the hearings have been completed. We expect the date for pronouncement of decision in next few weeks. The Minda Koraku's capex, as we referred little while back, our blow molding part business under our subsidiary Minda Koraku has been doing extremely well with healthy order book. Considering the orders already won and expected orders, we would be required to enhance our capacity to meet these orders. Further, we also need to have an in-house paint shop facility. In view of the above, MKL will be incurring expenditure of around 87.3 crores for enhancement of capacity and setting up in-house paint shop at Bangalore. In order to ensure we don't have two facilities in Bangalore, wherein in the current plant we don't have the space for setting up paint shop in the current location, we will be setting up a new greenfield plant and we will move the existing facility also to the new location. So we have all the operations in one location, but with a bigger space and with further potential to increase capacity should the need be in future. This would not require any investment from parent company, which is Minda Industries, as Minda Koraku will be having sufficient cash to fund the expansion. The expansion will be completed by April 22. That's all from our side, and now we can open the floor for Q&A. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thanks for taking my question. Firstly, congratulations on a very good set of numbers. So the first question was on the top line. So I think in terms of our segments, the switch division has clocked almost 40% plus kind of a wider growth. So if you could just provide more color on what has driven this growth, is it more on the PV side or on the two-wheeler side? Now, how do you see this going forward?
So the growth in switches, Nikhil, as you rightly mentioned, it is north of 30-35%. And the growth is primarily in both, in four-wheelers also and in two-wheelers also. This is supported with new customer additions, as you would have noted in past few quarters. We have been referring to new customer additions in four-wheelers, and also in two-wheelers we have added a lot of more components. A, definitely it has benefit of BS6, and B, it also has benefit of new products like the side stand switch, which we have been taking some time back, which has started gradually now. So with all this, there has been also improvement in our share of business with some of the customers. So I think all of the factors have helped.
Okay. And just on a related part there, you mentioned a few new orders on the switch side. So, by when can we start? Can we expect those to kind of move to revenues in the next couple of quarters? And what would be the quantum? Is there any significantly big order there?
So, first of all, Nikhil, all these businesses which we speak about for new orders, normally they are like 18 to 24 months ahead. Because once you get a business, it's normally for the new production line. And in terms of value, the various components which we just spoke about, this was primarily, it's not that they are new products, but they are like products which we have secured business from another customers whom we have not been supplying. Say, for example, Minda or MSIL, some of the switches which we were earlier not supplying, they have been added. And total order value for these component is roughly around 60 crore a year.
Thank you. And my last question was on the margin front. So again, on the margin front, I think it's been a very good performance. And I know that you don't get into segment-wise details, but just if you could just provide some qualitative cover. Have you seen a broad-based improvement in margins across all segments? And specifically on the PVLI wheel, you have mentioned in the past that margins there, which were in the high 25% plus kind of margins, they will not sustain and they will normalize. So has that started to happen? I believe you had some preferential pricing in certain products that you are supplying to Maruti. So has that started to happen, or is it still some way down?
Yeah. So that is started to happen, but with the increase in volumes, if you observe, Nikhil, that there is definitely an operating leverage which helps. So with the significant growth in sales, while there have been efficiencies which were brought in the system by reducing the operating costs or reducing the the prices of the material we procure to whatever extent we could do, there have been efficiencies which we have been able to bring. I think I touched this last time also in terms of specifically raised alloy wheel. So alloy wheel, in terms of operating cost, we will be actually in the top decile in terms of global operating cost. I think we are being benchmarked by the others the way we run our alloy wheel plant. So that also gives a lot of advantage in terms of the margin. And in terms of overall number, it still enjoys the kind of margin you spoke about, despite the new businesses which are coming at the competitive pricing.
And just about the other segments also, are you seeing margin improvements there?
No, so other segment also, if you see the overall margin profile has improved. But if I may have to pick a segment which still there is scope for improvement is our lighting and acoustics, the international part. Thank you.
Thank you. The next question is from the line of Ronak Sada from Systematics. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on a great set of numbers. Sunil, first question on the LMT segment. I mean, if I knock off the 30 odd crores incremental top line from two-wheeler plants, the YY growth is largely flat here. So is there some kind of supply chain constraints are we facing? Because Maruti's product mix had largely normalized during the quarter.
No, so if I see only four-wheel, so four-wheel segment, which is Minda Kosai, right? So Minda Kosai compared to last year has done significantly more. I think their total sales is higher by more than 30%.
Okay.
It's actually 33% to be precise.
Right. Okay. Okay, my mistake.
So maybe we can cross-check your numbers separately.
I'll do that. Sure. So the four-wheeler segment has seen almost like a 33% growth. Then that looks okay. Perfect. Okay. And secondly, on the balance sheet side and cash flow side, if you can, help us understand what are the kind of capex you're looking for current year and next year now, given you have, added the blow molding capex to it. And would we, kind of generate free cash flow during the year, or what's the sense given the working capital normalization? So how do you see the cash flow side for the full year? Yeah.
So, Ronak, as I said a little while back, that in terms of first the capex, I'll take your 2-3 questions one by one. So current year we have done a capex of roughly around 240 crores, and I think overall for the rest of the year should be around 300 plus minus few percentage points, and that's what I think we have been guiding earlier, that we are not cutting our growth capex, because large part of this capex is a growth capex, primarily sensor and alloy wheel project. As far as your future capex goes for next year, normally we comment on it along the annual results, because we have just started our budgeting exercise. So while I may not be able to give you a broad number now, but definitely we will be free cash positive in the next year. And also in the current year, I am pretty confident that despite we have got working capital which has sort of taken back. So if you see our last year, we had a huge free cash flow. As I said, primarily because the last 10 days of lockdown, I'm sure every company has been a little conservative in releasing payments. So while there has been receipts, payments were a little controlled way. So that had led to maybe abnormal situation at the end of the year, which led to some better free cash flows. But that cycle has A, reversed. B, with the increase in volumes, that has also taken little more working capital. And also when you start a new plant like Supa, which is like a huge plant, that also you need working capital both in terms of debtors and inventory. So all these things have taken a lot of money. But if I have to take out my project capex, I'm pretty confident that end of the year we should be free cash flow positive.
Sure. And the final question, on the electric vehicle portfolio which you just highlighted. So what's the sense,
Ronak, please speak a bit loud, please. You're not audible.
Sure. Sorry. Looking at the EV product portfolio, what's the sense, in next 3 years, where could this be, in terms of contribution to overall top line? Do we have a target in that sense? And will it be equally profitable to the current margins, or should we see this as slightly dilutive in the near term?
So Ronak, I completely understand the logic of asking this question, but if I may say so, honestly, it will be a bit premature for us to comment on the kind of revenue we have or the kind of margin we have for future, because the EV market itself is evolving, and as we see today, it is almost negligible. So I'm sure next few years, 4 or 5 years, the market will evolve in itself. And why we have sort of chosen to show a big picture today is that we all know that most of our products are going in almost all the EVs, barring filters. Almost all of our products will go into EV or a non-EV. There are additional opportunities which we are working, and that's what we thought we share upon. Maybe I would request Amit to share his thoughts on what does he see 3 years hence.
Yeah, thanks, Sunil. So I think, from my perspective, the focus of products that we have in terms of EV have been in places where we believe that there is enough government push to discourage imports, right? So there is now these OEMs who are wanting local products, and we've focused on some of the high value products. If you look at it, we are not looking at low value products, but we are looking at high value products, and we believe that the margins in these should be decent. As Sunil said, can't comment too much about it right now because they also are under pressure from Chinese suppliers and stuff, and we are evolving, we are adding more features, and we are trying to make sure that we are able to give better value to some of these OEMs. And I think at the same time, the whole EV scene is going to evolve with trying to find more value of people investing in an EV, which is today more expensive than their IC equivalent. So there is this whole, evolution happening with respect to price, features, and what the customer would demand. But our focus is look at the traditional OEMs and their entry into EV, look at high-value products and low-value products, and also look at where we can counter the imports through the subsidies and others that the FAME 2 policy is pushing for. So, I think that's what I can share right now.
Perfect. Thanks a lot and all the best.
Thank you, Ronak.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi sir. Congrats on such a strong set of numbers. I mean, it's really amazing number that you delivered. Firstly, I understand lighting growth because of the increasing content of LED and all.
I request you to please use the handset.
Is it better now?
Yeah, slightly better.
Yeah. So I'm asking that if I look at the switch growth that you have mentioned, both four-wheeler, two-wheeler has grown very strongly. Especially in the two-wheeler switches, what exactly is the content increase because of this? You mentioned the side stand switch and BS6 related increase in the switching cost, basically. I mean.
So Ashutosh, you know that this exercise we normally do at end of the year in terms of what is the product-wise kit value increase. So I'm sorry, I'll not be able to share exact details as of now.
But I mean, the question is because I mean we have seen almost 35-40% growth in the switches vertical YOY, and obviously industry has not grown so much. So I mean, is it addition of switches or in the same switch basically? I mean, there is a content increase over there.
It's both, Ashutosh.
Okay.
As I said, I think last time also we said that we added some switch like a gear shifter switch which was not there earlier. So we have been adding more switches which increases our kit value also, and also addition of newer customers. So it's both which has helped.
And switch is generally is basically compared to lighting, obviously the high margin business as well. That's why probably getting some benefit in margin as well.
Yeah.
And sir, on the two-wheeler alloy wheel side, we did 30 crores in the last quarter. Going to next year, what kind of revenue can assume from there based on whatever ramp up we are seeing in the segment? Also, we mentioned a new order. So is it from same OEM or a new OEM we added?
So we have actually been talking to other OEMs, and we have been sort of almost at the verge of closure. And so I think as of now, while our capacity is 4 million, and this will get ramped up, as I said, by mid of next year to capacity almost September. So if you see 6 months, we should get a peak revenue, which should be something around 230 to 40 crores plus 6 months. If I take an average of around 150 crores, then we should see a revenue next year in the range of 350 to 400 crores. And also in terms of capacity, the kind of response we are getting from new customers, we might look to pull forward our second phase, which we said that we will announce maybe after a year or evaluate. But considering the various requests from customers for the two-wheeler alloy wheel, we actually are evaluating internally. We are not taking a decision, and that's why I did not cover initially. We might look to prepone our second phase of the Supa plant, which goes from 4 million to 6 million wheels.
Okay. And sir, in this, basically we have mentioned a new order from Mahindra and Renault, I believe. So that is related to switches or lighting?
Mahindra, I remember it was for switch. Renault, I don't think I mentioned.
Okay.
John Deere for USB charger and
switches. Okay.
Yeah. John Deere.
And the lighting, I mean, the increase is mainly driven by the new orders that we got from Maruti. and also LED content decrease, right?
No, so the new orders, as we said, Ashutosh, will get commercialized only in FY22-23. And as I mentioned that the kind of orders we have won, I think last call also mentioned that current sales is roughly like 400 odd crores and the new business itself is like 200 odd crores. So we will need to expand our capacities, and the team has been working, as I said, a little while back. And we might need to set up another facility in Gujarat. People are working on it. As of now, it has not been put up to board for consideration. It's still on the papers. But most likely we will need to sort of set up a facility for meeting the increased demand, which is definitely, I'm sure you'll appreciate, it's a good sign that the business is sort of getting newer sort of volumes to grow.
And so lastly on this four-wheeler alloy wheel order from Korean OEMs, when will that delivery start?
So that, as we said, this four-wheeler alloy wheel, I mean you meant four-wheeler, right? Not two-wheel.
Yeah, four-wheeler, four-wheeler.
Yeah. So that is expected to start somewhere around the festive season this year. What is linked to their model launch, which is slated for this festive season, upcoming in FY20, calendar year 21.
Okay, sir. Thanks a lot and all the best. I mean, you keep on surprising on the numbers.
Thanks, Ashutosh.
Thank you. The next question is from the line of Siddhartha Bera from Nomura. Please go ahead.
Hi, sir. Thanks for the opportunity and congrats on a great set of results. Sir, first question is on the EV side. So, will it be possible to share the per vehicle, how much content will we be making, including the products which we have shown?
Amit, do you want to guess now or?
Broadly, sir, I mean.
I think it's hard to tell, but because I think there's various combinations there, but on an average three-wheeler, for example, I'm hoping to see anywhere from, if I include all the group products, maybe it's a larger number, right, over 15,000, but I think on the new products that we possibly would be adding would be in the 7 to 10,000 ranges. I'm talking of kit value where we would be contributing to that particular vehicle, but still in the works. So this is just very, very broad directional.
Understood. And what all things have you included here? The sensors, LED light switches, and the components, or what all things are included here?
No, I think when I'm mentioning that what are new products in the range of anywhere between 5 to 10,000, I'm talking of products that we don't make in the company today, but we would be looking at introducing going forward.
Okay, understood. So basically, the products under development which we have shown in the slide, that's probably you are indicating.
That's
understood.
right.
And coming also, and these products, so we will be having our own IP for these products. Is that the correct way to understand?
You said own IT?
IP rights, intellectual property rights. So we will have the IP rights for these products also?
Yes, we would. These are all homegrown products for which, yes, we would have the intellectual property rights.
Understood. And anything on the passenger vehicle side also you are looking, or this will be largely focused on the 2-3-wheeler segment?
I think as I mentioned, some of these products, when I look at, say, things like smart plugs, things like battery management systems, or I did mention, like TCUs or telematics control units, could be used both for 2-wheel, 3-wheel, as well as 4-wheel. Other products like chargers and others would need considerable amount of redesign to be used for 4-wheelers. So that is something that we have in our roadmap, but it's too early for me to talk about their development.
Understood, sir. And lastly, on the overall, directionally, the 3 categories which we have shown, production, development, and study. Some timelines can you share, like when we will start, booking revenues for these products, say, in the next 4 or 5 years?
So I think a few of the products that I've already mentioned, I think if you if you look at the font colors which have already gone into production, so we did some volume this year. Obviously, all these OEMs are just picking up, so they are not doing great set of numbers for me to talk about. But some of the other projects which I said are under development, which were highlighted, all go into production in 21-22. So by mid of 21-22, they would go into production. Products that I've mentioned under steady, I believe, are a year and a half out right now.
Okay, great, sir. Lastly, on the sensor side, so sir, we have been indicating that sensors is likely to ramp up much strongly. So are these sensors for electric vehicles in addition to the ones which we are already planning to ramp up, or this is included in the sensors which we have talked about in the past?
I think this would be included in the sensors that we have talked about in the past, but these are maybe right now not a great deal of volume to be able to, also talk about as a separate set. But I would imagine if Sunil's mentioned numbers, this would be included in those.
Yeah, it is there, Siddharth. So as you have been saying, so sensors actually have done, I think, one of the best in the segment. So compared to last year's sales, Q3 versus this Q3, sensor sale is almost double in terms of revenue.
Okay. And so annualized, how much will be doing sensors, and how should we look at the ramp up now?
From an annualized number of 130, 120 crore, we are over 200 crore now.
Okay. And that should go up to what level?
As you said, over 3 to 5 year period, our overall objective has been to take it to a range of 4 to 500 crore.
Okay. Great. Thanks a lot, sir. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Vimal Gohil from Union AMC. Please go ahead.
Yes, sir. Thank you so much for the opportunity, and congratulations on a great set of numbers. Sir, my question first question is on LED. You seem to be doing really well out there, despite some of the competition over there is extremely high, and we already have some well-entrenched suppliers in large OEMs like Maruti, and I'm talking about Japanese suppliers. So how do you intend to counter that? That's my first question. Second one is on an account on the P&L. I see a sequential decline in the share of associates. So what should we read over there? And if you could just comment on your gross margins, that despite raw material pricing pressure, your gross margins were in good stead. Was it because of mix, or is there anything else to read into it? And last one being, if you could just make your comments on the PLI. How is Minda Industries looking to capitalize on the impending opportunity going forward? Thank you.
Yeah. So thanks, Vimal. I think you have 4 questions, and let me try and answer all 4 of them one by one. Going by the same sequence, you said, how do we counter the LED business, and there is a lot of new entrants. So as we have been speaking, Vimal, for past couple of years, that the lighting is the most competitive business in India, where we have all the global majors in the country. We talk of Lumex with Stanley, or Motherson with Magneti Marelli, or IJL Koito. So you take the name, and I think almost all the global lighting manufacturers are there in the country, and everyone has some technological tie-up overseas globally. But we have been holding our fort without any global tie-up based on our own. And that is why, if you remember, last year when we have acquired Delvis, the whole strategy for acquiring Delvis was to fill that technology gap which we have been observing. And once we filled that gap last year, you would have seen that the kind of businesses we have won, and they are all competitive businesses in the country. So we are in a competitive landscape where we have to deal with not only the new players but also the existing players. And I'm happy to say that we have handled that pretty effectively and efficiently to increase our share of business in the lighting segment and garner newer business, which is also primarily from the Japanese OEMs. That's on the LED. Secondly, your question was on share of associates, why it is going down. Yes, In associates, last year, I think last quarter we had roughly 10 crores, and this quarter roughly 9 crores. There is a drop of a crore there. This is primarily because of a couple of businesses. Again, we have faced some challenges as in past. We have seen some improvement, but with couple of businesses where because of the sudden demand, etc., we had to airlift material. There has been a significant logistic cost and some material price hike, which is primarily in two businesses, which is Minda TTE and Minda Onkyo. So these two businesses, we have faced some challenge in terms of profitability and maintaining the supply chain demand, and also had some significant costs via airlift of the material. That's on the associate. And in terms of gross margin, yes, your point is right that we have been able to withstand the storm, primarily because we have, if you see, the kind of inventory in the pipeline is almost like 30 days or so, which does help you. And as I said in the beginning, we do have this kind of headwinds going forward in Q4 because the price adjustment with the customers normally has a lag of a quarter or half year or a year with some customers. So adjustment either happen in January or in April. So going into next quarter, we do expect some to face some headwinds, and currently we are working on it, how to neutralize those headwinds, how do we address, proactively request the customers for price adjustments. But specifically on Q3, yes, we have been able to sort of face the challenge of spike. And as you know, the spike actually happened gradually. So it is not that the full quarter we have seen the price increase from day one. Yes, we exited. It was a very high price. So there definitely is a benefit of the low cost inventory to enter into the quarter, and also the kind of some negotiations or renegotiations we have been able to do, and also some inventory which we have been able to procure on a timely manner to sort of bear the price high coming on our books. So that's on the gross margin. In terms of PLI, first of all, definitely I can confirm that whatever are the boundary lines which have been drawn for PLI, we qualify almost all the conditions. We are all waiting to see what are the contours of the scheme, but definitely the 3-4 key parameters or the policies components of the scheme, which is maybe a global champion scheme or the export-oriented scheme. So we are already there. And once the schemes are announced, I'm sure it will give a bump up to all the companies in the country, not only Minda, where it will enhance the competitiveness globally. So while the government is giving a subsidy, I'm sure the idea for that subsidy or support is to be more globally competitive. Yes, part of it you would like to retain to your bottom line, but I'm sure some part of it we will try and see to garner more business globally. And we are working with a lot of our customers, irrespective of the PLI scheme. So how do we make India as an export hub? We have set up our marketing team, enhance our marketing efforts in ASEAN. And now we will be soon setting up another office in Thailand. And we have increased our marketing efforts in Europe, as you mentioned earlier. And we are working on restructuring our marketing team in Europe. So to see how do we get more pie of export, because we have long-term relationships with our customers in Europe and ASEAN, but somehow we have been limiting ourselves to only few products. The strategy is now not only to get new customers, but whatever existing customers we have, how do we sort of market them more and more products? And instead of catching new customer, existing customers, since we are already there, the idea is to be competitive there and provide the quality what they are looking for and export from India. But as I mentioned, this is something which you start today and you work with the customers and you get into the business cycle for the new model. It takes something like 2 years to 3 years. So it is not something that today PLI scheme comes and tomorrow you start supplying. But it will have its own timeline. So that's the overall big picture on the export and the PLI scheme.
Fair enough, sir. Sir, just one last question. I missed out on the gross debt number that you gave. Could you just repeat that for me, please? I
think it was 1,080 crore or something.
Okay. Fair enough. And that has come down, right, as compared to what we had in March? Because
around 100 crores.
Okay, fair enough. Thank you so much, sir. All the very best, and keep surprising.
Thank you.
Thanks a lot.
Thank you very much.
Thank you. Before we move to the next question, I'd like to remind our participants to limit their question to 2 per participant. If time permits, you may join the queue for any follow-up. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir, good evening, and thank you for the opportunity. Firstly, so the question is in general on the capex intensity that we have seen in the last 2-3 years. And obviously our ROC is kind of dipped even this year significantly. So, what is the kind of thought process there? Because the plan, what you have been telling us so far is to now sweat out these assets and get the ROCs back on track. So is there any change there, given that now we are looking at again capex around NKL and probably some of these new products that you've shown, especially on the EV side of it, that there are some of these products under development and under study. So is there any big change in this next 2-3 year capex plans and how the ROCs can kind of improve again?
Yeah. So thanks, Mukesh, for your questions. So first of all, as we have been saying that we will be reaping the benefits, and I'm sure once you analyze the results of this quarter in detail, you will actually observe that while I'm with the full caveats that Q3 is not a certainty or assurance for full year, but if you have to just analyze the Q3 numbers, the ROCE for this quarter is over 20%. So this definitely gives you a comfort that we have been sweating our assets. But once you keep on increasing sales, and if you remember, we have said that for additional 20%, 30% sales, we are already there. And if you see, we are actually in that region.
Right.
And now in some of the businesses, it is not all businesses, some of the businesses, because of the new, the growth which we are seeing, it will need some money to be invested. Like the example which we took of Minda Koraku, we actually, if you have land, we would have actually done in the existing plant a greenfield expansion, a brownfield expansion, because we had to not only cater to the increased needs, but we had to set up a paint shop. But because of lack of space, we have no choice but to shift this plant to a new location. So I think what it does, it gives us an opportunity to not only move to a new location, but also maybe a little bigger location. Maybe did not have that thought process that in future we will need so much of land. So once we go to a new location now, we will keep some additional land for even further growth in our hand. And so this, I would say, it is not something which is a huge surprise. It was definitely, if business is growing, you have to make sure that there are infrastructure to support the business, and it is primarily, I would say, while we are spending some money, it is more plant expansion and business expansion rather than going to a totally greenfield location, while it looks apparently so. And even the other thing which we spoke about, light, I am sure you'll appreciate if we have to grow from where we are to increase SOB. I'm sure existing plants, you will not design to give you a 50% higher revenue. So whatever
right.
But I can assure you one thing, that the kind of lumpiness we have seen in capex, personally, I'm not sure if we will see that. But whatever growth comes, if this growth is backed with customer commitment, I'm sure you would be more than keen to see that growth than us. And we will be very prudent in investing our money. In fact, if you remember, even for alloy wheel, two-wheeler, we said that we will wait for a year and then take a call on the phase 2 expansion. But we have so much of requests from customers for additional volumes. We are going back to our drawing board and seeing how early we can expand that plant, because then it will be a brownfield expansion, and your delta normally for any brownfield expansion returns are much better than a greenfield expansion.
Sure.
So while we will be definitely prudent, Mukesh, and thanks for raising this question. It also emphasizes that we have to be very, very cautious about spending capex. So that's very, very clear. In terms of your new products, you asked whether there will be going to be a big change in capex plans. As of now, it is unlikely, Mukesh, because these products which Amit has also shared, they are mostly aligned, as he said, to some of our existing products. Amit, you may confirm if I'm not right. And they might not necessarily, every product will need a greenfield plant.
Yes, that's right, Sunil. I think we are not talking of new plants or major expansions. I think our current controller division and our EMS company called Minda are capable to handle this.
Sure. Understood. Thank you for that. And second question is on the raw material cost itself. Given that we have such a large mix of products, including a lot of plastics, etc., how much would steel, if you could just give a ballpark, how much would steel be as a part of our raw material costs? I mean, steel or metal, largely steel.
I don't think steel is significant because we never speak about steel, honestly, because it's primarily the what you call press metal parts, which are not very significant in value. Amit, do you have any idea about how much of steel we use normally in our products?
I'm sorry, I didn't catch that question. How much what?
Steel. Iron.
Okay. I think not much. I think except maybe Harita, that's where we use a lot of structural steel. But otherwise, I don't think we use a lot of steel in our parts.
Sure. Understood. And because you brought up Harita, we've seen significant growth in Harita's numbers in the third quarter. Is there any comment you can give? Is it the existing business for Harita or any new business that they have started serving there?
Okay, I would say maybe we speak about Harita in the next call because I hope by then we have everything in our control.
Sure. I'll look forward to that. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Aditya Jawar from Investec Capital. Please go ahead.
Hi, thanks for the opportunity. Just one clarification. The two-wheeler alloy wheel plant in Supa, you mentioned that the capacity is about 4 million. So that, does it mean that for the new OEM, the order will, start executing once we add the capacity and the number of 400 crore peak revenue, there is an upside to that considering the new order that we have won?
Okay. So we are trying to balance even new customers from the existing capacity. As you know, Aditya, 4 million wheel is based on certain weight. As we spoke earlier, it is based on the belting capacity of the plant, which is something around 13,000 tons a year. So it is based on the weight of the wheel. If the weight of the wheel is higher, the number of wheels may be a little lower, maybe 3.5, 3.7 million. And if the weight of the wheel is less, it can go up to 4 million wheels a year. So in terms of annual revenue, at 4 million wheels, our expected top line is roughly around 450 crores. That's what the plan was. And we intend to start our new customers also with some small volumes from the existing 4 million so that we don't wait to add another customer till the phase 2 is started and commissioned, because that will take another maybe year and a half.
Okay. Just to, one small clarification. So we have a line of sight of 4 million from the existing customers.
Yeah.
Is that? Okay. And
more than that.
Okay. And, just on the gross margin part, you would have seen, the commodity inflation has been quite sharp. And you mentioned that some of the customer contracts are between 3 to 1 year. So, since we are in middle of the next quarter, is there, a number that you can share that, what percentage of contracts you have been able to negotiate so that the difference between the contract price and spot price comes down? And, what could be the likely impact of commodity inflation in the near term?
So as Aditya, you have noted that we have a lot of commodities, lot of customers, and also it is different for different customers. Like some of the customers, we will be able to have this price adjustment from 1st Jan of the year itself, wherever there is a quarterly price adjustment. Where there is longer, as of now, you'll appreciate we are more in a request mode. because if you go by contract, obviously customer also has a pricing pressure and we have to appreciate it. So we are trying to find a win-win where the pressure of the commodity price increase can be balanced. Overall, definitely in Q4, we will see some of such impact to be absorbed by the company. As of now, I don't have a number overall for the global average, because you'll appreciate you have 30 businesses and every business has got multiple customers. So as of now, I don't have that number handy as to how much will be in percentage term and average impact for the quarter, but definitely there is going to be some impact.
Okay. And, the final question, will you be in a position to share revenue, contribution of Maruti for 9 months?
Sorry, can you be a little loud? I am not able to clearly hear.
Yeah, sorry. Yeah, so will you be able to share, the revenue contribution of Maruti for 9 months FY21?
Sorry, Aditya, we don't track on a quarterly, monthly basis. Not even comment, honestly.
No, okay.
So, customer specific, I will appreciate this confidential data and it's not advisable to share in the...
Sure. Okay. Thanks. That's it from my side. All the best.
Thanks, Aditya.
Thank you. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Congrats, Moraji, for the good set of numbers. I am late in the call, so my mic missed out. So just going by the numbers prima facie, first question came to my mind is sequentially 23% revenue jump and your margin is still the same, whereas gross margin impact is yet to feed through the P&L. So anything which I missed out earlier in the call, or if you can explain, sir?
I don't know. I don't think you have missed out anything. So there are 2-3 things which has helped us, Basudev, in terms of maintaining our margins. First is, as you know, that we have reinstated our manpower costs from 1st of September. So there definitely is a negative impact to the taxation in the quarter compared to the preceding quarter. But because of the volume growth, I'm sure there is some support because of operating leverage. And also, as we mentioned last time, that some of the cost reductions which we have been able to do, we have been able to negotiate for the full year. So the benefit of that cost reduction exercise we continues to reap. And in terms of the RM price increase, as we mentioned, that definitely there is a support when you move into the quarter from 1st October to 31st of December. The price increases have been gradual. So definitely once we see today, the prices are at a very elevated level. But when we entered the quarter, you do have some inventory which is almost 3 days or so, which is a previous quarter owned purchase inventory. Plus, we have been able to buy some inventory to hedge against the expected rise in the commodity prices. So that also has helped in terms of balancing the overall material cost and managing the same.
So, for example, if I see other expense line item, 164 crore moving to 212 sequentially, which is almost 30% against 23% revenue growth. So is it because of the two-wheeler plant getting commissioned on a meager revenue and fixed costs are full blown up? How to look at that, sir?
No, definitely that is one of the aspects, Basudev, when we see what we call quarter to quarter delta. But if I see specifically from the other expenses cost, there is definitely a higher cost because of a lot of air freight being incurred for the sudden ramp up. It's almost like, if I remember correctly, 6 crore was the impact in the quarter because of airlifting of material, because of the sudden rise in the demand, which somewhere you have to absorb, somewhere you share with the customer. So the net impact was roughly around 6 crore, which normally you would not see, and this continues even in the current quarter. There have been higher expenses towards power and fuel, etc., because with the volume increase, all these expenses also get increased. Some of the travel costs, etc., which were not happening previously, all those things have gradually picked up with the opening of the economy. So there has been, I'm sure, all the reasons for this cost increase, which is, and in addition, as you rightly mentioned about the commissioning of the super plant. So all these things put together has led to the other expenses increased a little more than the share in the revenue.
Understood. So almost you can say 10-12 crore other expense could have been lower if things were relatively normal. So that would have added on to the margin with this level of revenue.
You may say so, but with higher activities, I think it's better that to have more sales.
Yeah. And sir, salary revamp getting normalized. So it seems QOQ is a 20% jump. So is it 20% salary reinstatement or some temporary additional labor because of ramp up in production? So how to look at that?
Yeah. So as you know, Vasudev, that almost half of our operators we try to keep on a variable cost basis to adjust to the volume volatilities. So with the increase in volumes, you have to increase your temporary manpower, which you may call temporary, but it is actually a sort of a semi-permanent, which is off-roll employees, you can say contract manpower. So to take care of the volume volatility. So once you increase the volumes to produce those kind of numbers, and most of our products like switches, lamps, etc., they are like, or horns, they are all assembly line operations. So with the increase in volumes, actually your manpower cost increases proportionally. So the large part of the increase of the 20% comes from the what you call operator's cost or the blue collar cost.
Mr. Banerjee, request you to join the queue for any follow-up as we have several participants waiting for the turn.
Same topic.
Hello, Mr. Banerjee. Please request you to join the queue for any follow-up.
No, but I hope I have answered to his question.
Okay, I'll just unmute. Yeah. Vasudev, your line is unmuted.
Yeah, simply with Q4 being seasonally better quarter for cars, look out at Maruti's production outlook or even for two-wheelers. So with further revenue ramp-up potential in Q4, how should one look at, again, the same employee cost and other expense? As you highlighted, employee cost, one should prorate with revenue ramp-up because of the contractual labor. How to look at other expenses for Q4 as such? Should it remain static with revenue moving up, or how should one look at it?
No, even first of all, it won't be fair for me to comment whether revenue for Q4 will look up, because in last Q4, October has been a record number for most of the OEMs, and those numbers are yet to be seen. So without commenting on whether Q4 will be higher than Q3, which looks a bit challenging, but in case if it were to be, some of the costs which are there in others or employees will see an increase, because to the extent they are variable in nature, like fuels, power and consumption, etc., etc. There are some variable costs which will increase in case the volume were to increase further.
Okay, sir. Thanks.
Yeah. Thanks, Vasudev.
Thank you. The next question is on the line of Anubhav Rawat from Monarch Network. Please go ahead.
Yeah, hi, sir. Good evening. Congrats on a good performance. Just a couple of questions. So, sir, this quarter, could you just throw some light on which associates and subsidiaries did well for us and which ones lagged?
So, as I said a little while back, I think the only couple of things, JVs which have lagged or associates is Minda TTE DAPS and also Minda Onkyo. These are the two JVs which have actually pulled us a little bit down compared to Q2.
Okay, but on a year-on-year basis?
I think on year-on-year basis, almost all of them have been okay. Let me tell you exactly about these two entities also, which is TTE and Onkyo, right? Compared to last year, Onkyo is almost same, and other was MTTE, TTE. Yeah, that's also almost in line with the last Q3.
Okay, so it's flat basically for both of them.
Yeah.
Okay. And sir, going forward, so how is our order book looking? In the near future, how do you see production ramping up?
No, as you know about that, most of our products are linked to the destiny of our OEMs, and with the volume increase, our volume fluctuate. But additional, what is important for us is how do we increase our share of business, how do we increase our kit value, and how do we sort of deliver on our new products. So on all these fronts, I think we have been working very, very positively and aggressively. In terms of new products, they will continue to add top line, which is the alloy wheel, sensors, etc. In terms of existing products also, we have seen the new kind of switches we have added, or the LED motor we have added. We expect this momentum what we have built in Q3 to stay in the coming quarters.
All right. Just one last question, sir. So can you give some, what is the actual scenario on this alloy wheel import? I mean, is there a ban or is there a ADD? So, I mean, how will it affect us going forward?
So there is no ADD on alloy wheel. On four-wheeler, theoretically there is, but practically I would say no, because while there is an ADD, but the three large exporters from China, on them the ADD is negligible. It is $0.08 per kg, which is almost, I would say, zero. And on two-wheelers, there is no anti-dumping duty. So on alloy wheel, practically there is no anti-dumping duty as of now.
Okay, and there is no import ban also, right? Or
No.
Okay. So despite that, we will continue to grow.
Yes.
Okay. Sure, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yes, sir. Good evening and congratulations for a stupendous performance.
Thanks, Shashank.
Yes, sir. I have just three main questions, sir. First and foremost, sir, we have grown ahead of the industry, right? So you yourself mentioned that amidst the 17% kind of a volume growth, our sales growth was roughly 36%. So, sir, is there some element of inventory being jacked up at the OEM level of the component that we manufacture, fearing a lockdown or any temporary disruption in manufacturing activities?
Okay, that's one.
Secondly, sir, this is the second quarter of sustainable 14.7% EBITDA margins. With cost pressures now coming in play, what is the sustainable range of margin trajectory that we are seeing in future, which you could guide us? And third, with PCBs in shortage in the global market as well as domestic, do we have any role to play within? Can we play any role in that arena?
Okay. So I'll take first two, and maybe for third I will pass on to Amit to share his thoughts. So first of all, in terms of inventory, your point was whether there is any customer who is increasing inventory. The answer to that actually is reverse. The customers have actually asked us to keep little more inventory. Normally we keep 3 days FG, and now some of the customers have asked us to keep 7 days FG to sort of save ourselves from any supply disruption, and that is also one of the reasons for higher levels of inventory. I missed to mention that in the beginning. So customer normally, if you see, they always want just-in-time delivery, and most of the customers are taking supplies more than once a day. So customer adding inventory is not an option as of now, because it's a delivery which goes straight on the line. So that's on inventory whether being built up at the customer end. Second, your question was in terms of EBITDA margin at 14.7% back-to-back quarters despite cost pressure. Is it sustainable? Yes, it's definitely a very, very big challenge to sustain this kind of margin, because till last year our average margin profile has been around 12%, and from there we have moved to 14.7%. And with the economy opening up, some of the fixed costs, as we were talking a little while back with Basudev, some of the fixed costs we will see sort of getting in as we see normalization with the vaccines sort of working, and the fear factor going out with the travel increasing, etc., etc. So some of the costs we do expect to increase. In terms of RMC, yes, there are pressures. So in immediate quarter, yes, we might see some pressure because of the higher raw material cost. And in terms of medium to long term average, I would suggest that we maybe wait for a quarter. Please bear with us. Maybe we give you better clarity once we talk for the full year, because by then we will be through with our annual budgeting exercise. But I can communicate directionally. We are working to see how do we sort of try and maintain this 13 to 15% kind of margin profile for the sustainable future.
Sure. Yeah. And so on the PCB front, do we have any role to play?
Amit, you want to take that shot?
Yeah, I could, but I just would like to understand the question better. Do you mean how does global PCB shortage impact our business, or could we do something about global PCB shortage? What was exactly?
Yes, so more of what can we do regarding the global PCB shortage? So is it a line of action for us wherein we can expect us, putting up capacity, or do we have the know-how of it? And secondly, consequently, with less probably PCBs in the system, does it also impact the electronic content that we supply to the OEs?
Okay. So I think, and I think this is more of not a lot of detailed analysis from our side, but maybe my viewpoint right now is, I think one, we've never looked at manufacturing bare PCBs. We do assemble PCB boards, so that means we buy bare PCBs and then populate components and actually convert that into products, but we don't manufacture bare PCBs. The bare PCBs is a market that's very stiff in terms of competition, has its own challenges with respect to like environmental pollution and other other issues. So right now, no, we are not looking at getting into bare PCB manufacturing, but we do convert PCBs into final assemblies. Your second question that you asked is whether I'm sorry, could you just repeat your second question?
Whether the global shortage limit the content of electronic content that is supplied to the OE?
No, it does not. I mean, an OEM, if it's using a particular ECU today, and if we supply the ECU, then we will have to supply the ECU. Otherwise, the vehicle doesn't work. So I don't think it's an optional product when you talk about an electronics in the car, and I don't see the content that we supply change. And I believe the whole PCB shortage is a short-term impact, and we don't see any of our businesses getting immediately affected due to PCB shortages right now.
Right, sir. So one last thing, if I can squeeze in to Sunil sir. Sir, the Harita Seating merger has been pending for quite some time, right? So every quarter we get almost the next date of hearing and stuff. So is there any bone of contention, because these are different line of businesses vis-a-vis the Minda standalone entity?
So your point is valid. So as I said that this Monday, actually NCLT has pronounced its decision for merger, which was positive. But one is the pronouncement of decision, another is getting the actual copy of the document, which hopefully we should get, I hope by tomorrow or Monday. And NCLT Chennai should also follow suit. We don't know why it got delayed, because hearings have been completed long back. It was just waiting for decision to be pronounced. So, and I'm sure you'll appreciate when things are in NCLT, there is no way to even put a request to expedite. But having said that, definitely there is no issue with anything which you are aware of. Plus, NCLT Delhi has already affirmed this decision. It's just a matter of getting the copy of the order.
Right. So in Q4, can you expect the consolidation of numbers?
Sorry?
In Q4, as in the next quarter, can we expect consolidation of numbers of Harita Seating?
Oh, absolutely. In case once we get the order from both Delhi and Chennai, then I'm sure we will have to consolidate.
Thank you so much, sir. I wish you all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Hi, sir. Thank you for taking my question. So if I just look at your third quarter revenues, you mentioned that industry growth was 17%, while you grew 30% plus. But if I look at 9-month revenues, industry probably declined by about 17 to 18%, and your decline was about 11%. And this also still includes a Delvis acquisition this year. So just wanted to understand the outperformance compared to industry has been much, much higher in this quarter. While if I look at on a 9-month basis, the outperformance obviously is still there, but it's at a moderate level. So just wanted to understand what happened specifically in this quarter, or how should we look at it going ahead?
I'm not, Nishit, sure on the 9-month numbers where delta is only 7-8%. But in terms of Q2, I think we all appreciate that there has been new products which have been added other than Delvis. There has been this two-wheeler alloy also being consolidated, plus some of the new businesses which we have won from our new customers that also has helped. And that's what I said, that we expect this momentum which has built to continue, because this is the result of getting more business and customers in last year, because you know that there is a lag of almost year and a half till you actually get the sales realization. And also some of this impact of BS6 also has helped us in the current quarter, where there are some new products which have productionized along with this festive season.
Okay. And just one last small question. On two-wheeler alloy wheels, given the plant has just started, was there some operational loss in this quarter, or we are profitable right in the first quarter itself?
No. You can't be profitable from first quarter, Nishit.
That's what I thought. So what kind of operating loss have we incurred in this quarter?
So this quarter, I think our total PBT loss was something around 10-12 crores, because it has a large component of depreciation and interest. So if you have to exclude that, then operating loss would have been like 4-5 crores.
You mean EBITDA loss, right?
Yeah.
That's still good. Okay. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that will be the last question for today. I now hand the conference over to Mr. Sunil Bohra for closing comments. Thank you, and over to you, sir.
Yeah. Thank you. So I would like to thank you everyone for joining on the call, and thanks for appreciating, and it definitely builds a lot of expectations for us to do more. I hope we have been able to respond to all your queries adequately. For any further information, we request you to please get in touch with us. Stay safe, stay healthy. Thank you very much.
Thank you very much. Ladies and gentlemen, on